much did that contribute to the data point we saw this morning, and how much is that contributing to the sales we'll see coming out of the retailers as they report earnings?
Yeah, look, I think when we look at the numbers, the consumer is healthy. The consumer spending is there. Their balance sheet is strong. That's not really what the concern is right now. We've known that for a while. All the while, our group has been under pressure, and discretionary has been under pressure. So the question's why? And I think the guest that was on before me talked about it. It's costs and it's supply chain. And so it's not about the consumer being healthy enough to make purchases into holiday and beyond. It's, are we going to get product here on time? How much is it going to cost? What kind of inflation are we talking about? I mean, look at the chart of cotton. We're seeing cotton at a decade high. So it's really cost and supply chain, which is where the concern comes from, not the strength of the consumer.
Okay, so of the companies, the stocks that you cover, who's going to get the goods onto the store shelves to be able to sell them for this holiday season?
Yeah, I think that's the big question mark on Q3 earnings is how are these companies going to guide their holiday? I think you've had a couple companies come out already that have said, we're going to have to leave some sales on the table. I think you're going to hear more about that. So that now starts to put in perspective that we're going to have some potential negative revisions in the space to some degree starting in Q4. And then look, our belief based on our checks is these supply chain headwinds are going to last through the first half of next year. And this is going to be a little bit of a problem when we start to lap stimulus and robust demand that we've never seen with companies with record margin rates. That's really where the concern is going to be, is how does that look like from a P&L perspective over the next couple quarters?
All right, you sound pretty bearish on some of these retail names. Is there anything you like right now, anything that's bucking the trend, or do you just steer clear of everything for the time being?
I think that we're concerned on the near-term setup. I think that there's not a lot of reason to run out and own these names. However, these pressures that we're talking about are transitory, and to the point that we made to start this conversation, the health of the consumer is very strong. So I believe there's going to be a rally in this group again. I don't think it's right now. I think you have to be patient. I think I've got more single-digit PEs in my group than I've had maybe in a very long time. I think names we like where we're comfortable with the earnings power and where we could see a lot of multiple expansion, Capri, Gap, Victoria's Secret. These are all dirt cheap names where we feel pretty good about earnings power, where I'm comfortable putting my money as long as you have some duration.
I think it was your note today, right, where you say Walmart is best positioned and that your proprietary pricing work suggests the company already accelerated some of their pass-through pricing. How common of an event is that?
So I think that some of these companies are going to look to take price for sure. I think that a good example of this, to take it back to soft lines, would be Levi's. And Levi's talking about mid-single-digit inflation coming next year, which again, that's cotton, that's logistics, but they believe they can take AUR up to offset all of that pressure. So companies are in a much better position to be offsetting inflation now, given the strength of the top line and the strength of demand versus several years ago. So that's another key positive here.